Hey, hey, folks, how you doing? So, we are here on this last day of February 2025, and the assets on the crypto markets have been moving along with the VEPs very nicely. In fact, it's days like these that I want to remind you of why it is the alpha trading suite of VEPs tools is as powerful as it is. Not only do you have access in the VEPs trading tools from Alpha Trading to the greatest calculators available to retail traders to show you the volatility, entropy, probability, and statistics of what is happening right now. But you also actually have the best calculators available to retail traders to be able to predict what is most probably going to happen in the future. Now, what do I mean by that? Well, again, if you know about our indicators, you know that one of them is the projection boss, which is now called the Alpha Trading Wolf Forecast. So we used to have two separate projection boss indicators. One was really built for non-continuous markets. It worked, it was capable of working on non-contiguous markets, but it wasn't fully featured the way we'd like it to be. But it was good and very solid. Another one was built for continuous markets, like crypto, and it was really powerful and had all the features we wanted, but only for continuous markets. It didn't really do what we wanted for non-continuous markets. Lo and behold, time came around, time passed, and our math brain figured out the unfigureoutable, and he made a combined version that has all the features we want of the indicator that we built previously for the continuous markets, but it also works on non-continuous markets now. So the Alpha Trading Wolf Forecast is the projection tool you want to get highly accurate maths for the distributions of normal and Laplace models. And this is super important because this basically means that you can use either of those distribution models on any asset, whether it's a traditional asset with non-continuous hours or a crypto asset, right, or any other asset that might happen to trade continuously. That's one thing. And the distribution models are very good at forecasting the likely distribution ranges, the highly probable distribution ranges of normal distribution and Laplace distribution, right, from any point that you put it on. And it's best, in our opinion, to use them on pivot points or reversal candles, if you will. Right. And you can set the projection length to be basically as long as you like. So even if you're trading like options, you could set it to like 60 on like a daily time frame, and you could see from where you're, from the current day to 60 days out, right? Where you could, if you're already in the zone, within that 60-day period, you could pull it back to the beginning of that 60-day period and see where it's going to be out to. You can see where you should set your take profit ranges, right? Where you should basically, where's the area where you should be ending your trade. If you know how to do that, by the way, if you want to learn how to do that, kind of a mini tutorial. I wouldn't call it a tutorial, but it was a very good explainer by Bill Bilbo in our live stream yesterday. You can see the repost of that on our Rumble channel. Just go into the Discord and watch, and click on the channel that has the links to the live streams, or you can just go into our Rumble channel directly. Just go into Rumble and search for Alpha Trading VEPs. You'll find our channel. Watch yesterday's live stream. That was the 27th of February 2025, and in there Bilbo explains very nicely, for example, he gives an example of how to set verticals and horizontals, just to monitor the areas and the ranges of what you should be targeting when you're trading options, using the projection boss or the Alpha Trading Wolf Forecast. It's a new name, so I gotta get used to it. Sometimes I still say projection boss, but it is the Alpha Trading Wolf Forecast. And the forecast is sunny, just like the sunny day here we have here. Bright and sunny day on this Friday. So what else do we have that can show you the future direction, right? And the likely direction of price? Well, you know that the volatility indicators that we have and the entropy indicators that we have show you the tendency, right, of the probable direction of price, right? Because volatility and correlation, and also entropy and correlation, can show you the very likely direction of price. Well, what else? Well, if that's not powerful enough, that volatility and entropy both provide you with the future direction of price, if you know how to read them well. Well, how about the fact that the RMLR, the reverse mean log returns, is an incredibly powerful predictor showing you the future direction of the RMLR with incredibly high accuracy, right? And it even shows you when it is correlated or not correlated, and when it's a significant correlation or not significant correlation. On top of that, there's a direction predictor built into it, but that's a separate direction. But that is literally a direction predictor of price. So you can see inside the RMLR, regardless of which direction the line is going, you can see separately which direction the price is likely to go. Right? So you can see, for example, if the RMLR is saying it's going up, and the prediction of the price says, the prediction of the price is saying the price is likely to go up. Well, and if there's a high correlation coefficient, hey buddy, hello, how you doing, buddy? Good boy, you're a good boy. This is my hair from my Saint Bernard. He slobbered on me. For sure, he smells them. He's amazing, man. So the RMLR can show you, right, the probability, again, of the future direction of the RMLR, which is incredibly powerful. Why? Well, because if you see the direction of price predictor, and for example, variance or entropy or volatility indicating the same thing, and there's a significant correlation with that and the RMLR information, right, then the asset is likely to do what that is all saying. Right? The probability is just extremely high. And if it's significantly negatively correlated to that, you can see the opposite will likely happen. It is also incredibly powerful at telling you, especially when you're at an extreme, like a second standard deviation band, or even more so a third standard deviation band away from the RMLR itself, when they're, when that happens, the asset is fully distributed away, and it's very distributed away. It has reached a limit. Doesn't mean it can't go beyond the limit, but it has reached a statistically probable limit. And after it stops hitting that band for a couple of candles, regardless of the time frame or the asset, it is likely to be in mean reversion. And again, you can see that when you line it up with entropy, variance, or volatility. You can see that happens, right? And the returns oscillator. You can see that after a massive distribution, the returns are, fully distributed away to the mean, and then they begin to mean revert to the mean. And it happens like clockwork. And it happens on every single asset, on every single, doesn't matter which time frame or which asset. Right? Continuous, non-continuous, doesn't matter. Any asset, any time frame. So again, if you want to actually have, people say all the time, oh, there's no predicting short-term price action in the market. It's just not true. It's just not true. People say, oh, traders always get wrecked because they're trying to predict short-term action, short-term events. Yeah, that's because traders, for the most part, are using voodoo TA. They're using traditional TA garbage that has no relevance with the mean, the returns, the volatility. And the entropy and so on. But with the RMLR and the volatility and the distribution models and the entropy and the returns and all that stuff, all the indicators we have in our stuff, at Alpha Trading, you can actually see what the probable short-term and medium-term and long-term movements are, but most importantly, short-term, right? Low time frame. Why? Because that's where you trade. Okay? You're not trying to trade the high time frames. You can, but why? Trading the high time frames is not really trading, it's just investing, right? Which is great, which is wonderful. And you can use those tools to invest. But you're not trading, quote unquote, when you're investing. You're putting money in a bag and you're waiting for that bag to grow in value over a long period of time. Probabilistically, it's going to grow in value. Now, of course, you're going to miss a whole bunch. You're going to lose a bunch when you invest. But you're also going to make a bunch, theoretically, if you diversify your portfolio correctly and you manage your funds and you do your proper risk management and you evaluate periodically and whatever. You manage it correctly. But you should use the VEPS tools to analyze what's actually happening, even on long-term holds. But when it comes to short-term holds, short-term trades, the VEPS is critical because it literally shows you, candle by candle, even on the super low time frames that actually matter more, right, to a trader. It shows you what's happening and what's likely to happen next. So again, if you want to learn to trade using better math tools than anything else out there available to retail traders, just come to Alpha Trading. It's really that simple. Our Discord is at alphatradinghq.com/Discord. Again, that's alphatradinghq.com/Discord. And jump on in to the Discord. See that you can get our free volatility starter pack. It is really free. And you can learn to trade completely for free. You're not going to ask you for a card or anything. Nope. You don't have to make a deposit or anything like that. If you learn to trade with our free tools, and you really should, and then you want to try our non-free versions, well, guess what? We have non-free versions of our indicator packages. And they're even, like I said, I discussed a bunch of them with you. But come and try our free tools first. We always recommend that first. There's no need for you to put any money on the line until you actually see for yourself how great our tools are. And the free tools are incredible. They are actually, after all, the first tools that we used when we built our tools. They're the first ones we had access to. They're the first ones our indicator builders built. So now we give them away for free. And they're the ones we give away for free. So you can learn for free too. We've always given away some of our tools for free. And then we eventually made a starter pack to keep it simplified for you. So you can learn really the fundamentals of trading, volatility, probability, and statistics. So come and do that. Come and learn completely for free. At some point, if you want either private tutoring, you can get private tutoring from myself or Bilbo. Usually we're the ones who do that. It really could be any of the co-founders, but we're the ones that tend to do that. And that includes a full year of a subscription to the Pro Tools. So not only do you get private tutoring for a whole bunch of hours, you actually get you get access to our indicators for the full year, like all the indicators that we have, the premium indicators, and access to our DMs and all that stuff. So you can do that. You can take a look. If at some point you don't want the tutoring, you just want the tools, you can subscribe to the tools, no problem. We have that too. And you can buy them on a monthly basis or a 6-month basis or a yearly basis. And you can pay with crypto. It's very easy. Bitcoin, Cardano, Solana. I think also USDT or something like that. I don't know. USDT on Sol. Anyway, I'll see you guys later. Happy trading. And see you in the live stream, which starts at 11 a.m. US Eastern Time in our Discord. Again, alphatradinghq.com/Discord. All right, happy trading.